All right, so this is a fun one. I love questions like this. Why is my basement such a mess over there? Oh yeah, because Maddie's back. Oh yep, I do got my Bruins shirt on again because last time we won when I wore this shirt, weeks, I play for the team. I'm the center, starting center on the Boston Bruins. Anyway, so I got to wear it again because we're playing the Panthers tonight. And I got a feeling the Bruins, because I'm wearing the shirt, we're going to take it to them. 5-3 B's tonight. You heard it here first. Everyone's going to be doubting the Bruins, but you heard it here first, 5-3. All right. So, man, David writes in, it's not his real name. We'll call him David. I have no rhyme for David. David, I got no rhyme. Damn, I should have called him something else. Dave the Cave Man. There you go, Dave the Caveman. All right, so David says, hey, Josh, we worked together earlier this year. I got a question for you. He said he's going to make $55,000 of income for the last of this year because he's going to quit. And then he says he's got $55,000 of earned income. All right? But then he's got $200,000 of a fair market value of an asset, well, stock, we'll just say, with a cost basis of 110. So FMV, CB, unreal, the gain is 90. All right, amigos. So he's got $55,000 of income, $200,000 of fair market value of a stock, $110,000 is his cost basis, $90,000 is his capital gain because he's going to sell this guy. In fact, my man Mark just sent me an article from Warren Buffett sold a bunch of his Apple stock at 21% effective tax rate in order to avoid a higher tax rate at 35% later on. And I just find it funny because Warren Buffett, you know, the big notorious liberal, but he says he wants to reduce his taxes as much as anybody else. I just find it interesting. I said, Warren Buffett, why don't you just pay more to Uncle Sam, dude? You know, why not? And the reason is, frankly, is because he's a fiduciary. He's managing assets for his clients. That's just a fact. So he's got to protect his clients' assets. He can't just start paying more taxes because he's a lib. Of course, libs don't, because libs are the greediest people that ever walked the face of the earth. That's just a fact. But I just find it funny. It's like, no, we should all be happy to pay more taxes. Well, by all means, Warren, do it. Why are you giving money to the Bill and Gates and Melinda Foundations, all tax-free? No, but the Republicans don't want to hear about anything raising taxes on the left-wing crazies that are friggin' dominating high society and culture. Republicans say, we don't want to tax those people. No, you got to tax all these people, dude. That's where you freaking have the carrot and the stick. You say, you continue to fund these insane people, we're going to come after you. This isn't hard, and we're going to use the proceeds to fund Social Security. It's so cool. The Columbia protesters, all these idiots on college campus, we're going to tax nonprofits. We're going to tax them. We're going to tax your endowments. We're going to make you pay property tax. And watch how quickly these people cave. It's just mind-boggling the Republicans don't do it. All right, so my man says, well, how much would my capital gain tax be? Because, you know, if we stay in the 12% tax bracket, right? If we stay in the 12% tax bracket, we have zero capital gain as long as we're in the 12% tax bracket. But are we going to be in the 12% tax bracket here? Well, the most will, because we take 55 plus 50 plus a $90,000 gain, that's 145. All right? Because this right here, the 110 is a return of principal. It's not taxable because we already pay tax on that. So that's 145 is our gross income here. All right? So we know if we take away our standard deduction, we'll just say $30,000 for simplicity. Our taxable income here is 115. And we know that about 82,000 or so is what keeps us in the 12% tax bracket. So we're going to have to pay, you guys can't see that. We're going to have to pay long-term capital gain on the difference of that right there. That's what, 18 plus 15, $33,000. So $33,000 at 20%. What's that? $6,600. Should have to pay about $6,600. I'm thinking, and not 20%, 15%. Excuse me, 15% long-term capital gain. So 33,000 times 15%. What's that? Oh boy, I don't know what it is. Oh, I got my calculator right here. Take a look. $4,500, something like that. 33 times 0.15. Yeah, $4,950. So we should have to pay $4,950 of long-term capital gain tax plus the ordinary income tax on this right here. All right, so let's take a look. I didn't write capital. Let's see what they come up with. So I don't know what that'd be. Minus, I don't know. We'll just have to. So basically, $4,950 long-term capital gain. I don't know. We'll just say roughly 10% here. I don't think it's going to be even that high. Let's take a look at what Right Capital says. All right, so let's dive into this. So Right Capital, we look at, so let me just show what I'm doing here. We're going to go to profile. We got investment. We're just right here. $200,000 is our fair market value. 110 is the cost basis. All right. We got our income at 55,000 schmackaroonies right here. We're married filing jointly. All right. So we're going to say we're going to go to retirement. I'm thinking probably we'll say 5,500 here plus 40. That'd be about $10,000. I'm thinking roughly, right? Well, maybe not 50. It shouldn't be 5,500 because that has a standard deduction too. Yeah, I'm going to say about 8,000. I'll say about $8,000 in taxes here. Let's just see. I'm not going to crunch the numbers that detailed because we'll just look at what Right Capital. But again, both these things, that'll be so this and that will have the standard deduction. So we have one. Well, I guess I already have the standard deduction there. So there we go. So I'm not sure what that'll be. Let's take a look. I'm going to say it's probably about $4,000 plus the long-term capital gain tax. We're probably looking at about $8,000 or so. Let's see what we got. And our taxes are $19,000. Oh, because FICA. Yeah, look at that. Oh, what state are we in? Yeah, $8,000 right there. Hey, man, that's right on. What a state. Crazy. What state is this? Good old state of Georgia. Man, they're hammering this guy. So, yeah, I was pretty close. Because I'm just talking about the feds right here. Look at that. Your old buddy Josh, man, freaking crushing. Don't you guys wish you could crush like me? So his tax payment's got FICA because he's still working, earned income. That state seems quite high to me, but okay, we're going to run with it. 5%, yeah, about 5% tax rate in the state of Georgia. Don't forget the state of Georgia doesn't have to honor necessarily the long-term capital gains of the federal government, which is 0% in the 12% bracket. I'm not sure actually the state taxes on this are up to snuff. I'm not sure. I've seen sometimes in Right Capital like it took a couple years for they even had Georgia. Once you're over 65 years old and you're married filing jointly, you get $130,000 of tax-free income. And if you're 62, you get between you and your spouse $70,000 of tax-free income. So, and Right Capital wasn't picking that up this a couple years ago. They're fine now, but I'm not even sure I buy that right there, that the state of Georgia would charge that much in taxes. But here's our federal tax by $8,200, almost exactly what I said, $49.50. I said, what, 4,000 there? Yeah, so a little bit, I said a little bit more than what it is. Let's go to 1040 here. And we'll go to details. And you're going to see, so here's our income. Here's some of our dividends and interest income off of the holdings that he had. Here's our capital gains. We have a little bit more capital gain than what I had because I had 91,000 or 90,000, and this is an end of year. So he was able to grow his portfolio by basically 5%, which grew his capital gain. So you can see 158 is our total income there. I had 145 as total income because, again, they had a higher capital gain than I did because we were able to grow the income, the investments. But still, either way, 145 is 158 according to Right Capital. It works for me. Our taxable income is 128. Yeah, I had 115. All right, that works. So 120, yeah, so I was pretty close, and I just did off the top of my head because I'm smart. This lump of coal is smart. 8217. Now what we're going to do is we're going to see the capital gain is going to show up right there on Schedule D, 97,000 schmackaroonies, Schedule D. But, right, it should be coming down here, $97,000. All right, but of that $97,000, again, like I showed you here, not all of it's subject to long-term capital gain because we're still in the 12% tax bracket. A portion of that, a good portion of that, stays in the 12% tax bracket. Anything above the 12% tax bracket gets subject to long-term capital gain tax right here, $49.50. Right? And that's just how it works, man. A lot of people think you could have $1 million of long-term capital gain and not pay any tax. So they're just wrong. That's absolutely simply not true. Let's go back to 1040 again. Anyway, so I love things like this because it's just fun to think about. So we got taxable income right there. Our taxes, $8,200. Yep, right on, man. And if I think, let's just go to Schedule D one more time, shall we? Shall. And we'll go down here. Yeah, so you're going to carry that forward, 97.54 over to the 1040. And we'll go back to 1040, and it'll say, hey, of that 97.54, how much is subject to the 0% threshold? And a decent amount was right here, 90,000 plus 55. I mean, a significant amount was subject to zero capital gain at all. So anyway, Good question, Dave. Hope this helps. You still have to pay long-term capital gains if your income goes into the next category, next 12, it's a 22% tax bracket. Love your thoughts. God bless.